Hello traders, you're welcome back to the Forex Geek channel. If you're serious about mastering Forex trading, then you are in the right place at this time. In this particular video, we are going to be diving deep into one of the most exciting and widely trading currency pairs in the Forex market, and that is none other than the USDCAD, the United States dollar against the Canadian dollar. Okay, we are going to break down a proven USD trading strategy that you can apply in your trading routine right away. But before we get started, make sure to hit that like button and subscribe if you haven't already. That way you won't miss out on future videos where we break down more Forex tips and strategies. And don't forget to turn on the notification bell so you're always the first to know when a new video drops. All right, let us jump in. When we talk about the USD currency pair, right, we are looking at the exchange rate between the US dollar and the Canadian dollar, right? The Canadian dollar is a commodity currency, meaning it's heavily influenced by global commodity prices, especially oil, since Canada is one of the world's largest oil producers. Now, the US dollar, on the other hand, is the world's reserve currency, and it plays a central role in global trade and financial markets. This makes USD CAD a very interesting pair to trade, as its movements are shaped by both the strength of the US dollar and the price of crude oil. Before jumping into trading, you need to be aware of key events that can impact USDCAD. Economic reports like the US non-farm payrolls and Canadian GDP data can create volatility, okay, along with news related to oil prices. So the first step in building a solid USDCAD trading strategy is to understand these fundamentals that drive the pair. Now, let us talk about technical analysis and how you can use it to develop your USDCAD trading strategy. One of the most important tools for trading USDCAD is the moving average. Okay, moving averages help us smooth out price action to identify the overall trend. So I'm going to be adding the 50 EMA to the chart right away, and I'm also going to be adding the 200 EMA to the chart. Okay, so the 50 EMA and 200 EMA are two of the most common indicators used by traders. When the price is above both of these moving averages, it signals an uptrend, right? When the price is below, it signals a downtrend. Additionally, we want to look for support and resistance levels, okay? I always emphasize on the importance of support and resistance levels. They play a very key role in technical analysis, all right? Now, support and resistance levels are price levels where the market has reversed direction in the past. Okay, as we can see, there was a rejection around here, a rejection around here, rejection around here, and here. So when you have a minimum of 2 rejections in the past, you already have a support or a resistance level. You can see here and here and here, and you can see in this case, rejection here and here and here, right? So when you have price approaching a resistance, right, there is a chance that we could see a reversal to the downside. And when you have price approaching a support, there is a chance that we could see a reversal to the upside. Okay. Another essential part of your USDCAD trading strategy is using indicators to confirm your trade setups. Some popular indicators to consider when trading USDCAD are the relative strength index, or the RSI. Okay, I'm just going to change this to the default settings. Right, I'm going to use the default settings for the RSI. Here we go. Okay, the RSI is great for spotting overbought and oversold conditions. If the RSI crosses above 70, the pair might be overbought, signaling a potential reversal or pullback. As we can see what happened here when the indicator entered overbought territory, we can see that shortly afterwards we had a reversal to the downside, right? And then when the RSI crosses the 30 level, it's oversold, which could indicate that the price is about to bounce back up. And you can see in this example that happened. Now, the next indicator we are going to be looking at, which you can use for your USDCAD strategy, is the MACD, okay? The moving average convergence divergence. Now, the MACD is a momentum indicator that helps to spot trend reversals. Look for the MACD line crossing above the 0 level, okay? As you can see, when it happened here, we had a buy move. This is a buy signal, you can see. And then when the MACD line crosses below the 0 level, we have a sell move. It's a sell signal. As you can see, we had a sell right after this bearish crossover happened. Now, another indicator that you can use for your USDCAD strategy is the Bollinger Bands, all right? The Bollinger Bands. Now, Bollinger Bands are useful for understanding volatility and price levels. When the price is near the lower band, it's often a sign of an oversold condition. And near the upper band, it represents an overbought condition. As we can see, most of the times when we had price get to the upper band, we had a bearish reversal. And when we had price get to the lower band, we had a bullish reversal. Okay, remember, using a combination of these indicators along with price action analysis can help confirm the accuracy of your trades. But it is important to never rely on just one indicator, okay? Combine them for a clearer picture. Now, one common mistake many traders make is not considering the right time frames and trading sessions when using their USDCAD trading strategy. The USDCAD is most active during the overlap of the London and New York trading sessions, right? This is when the market sees the highest volume and volatility, giving you more trading opportunities. As for time frames, you can start with a 4-hour chart or even a 1-hour chart. As you can see, we are already on the 1-hour chart. So if you want to get an overall view of the market, you can actually use the 1-hour chart, or you can go to higher time frames depending on the kind of trader that you are, okay? But when you want to spot a trade setup, you can actually decide to go to lower time frames like the 15-minute or the 5-minute charts to pinpoint your entry and exit points. Now, next up, risk management is crucial when applying your USDCAD trading strategy, okay? Even the best strategies can have losing trades, so it's essential to protect your capital. Now, one of the best ways to manage risk is by using a stop loss. A stop loss will automatically close your position if the price moves against you by a set amount, preventing large losses. You should also consider using a take profit level to lock in gains when your trade moves in your favor. For example, when we had signals from the moving averages, RSI, MACD, and let's say we had entered a buy around here or around here, right? Because we had a buy signal around here. As you can see, the support level was giving us a buy, the Bollinger Bands was giving us a buy, the RSI was giving us a buy, and well, the MACD was not exactly giving us a buy yet, but the buy came around here alongside the moving average. So let's just say we entered after all these indicators gave us a buy. A good place to set stop loss would have been below the previous swing low, okay? And then take profits can be at nearest resistance zones. Resistance zones can be used as take profit levels, or we can use these indicators to confirm your exits, perhaps RSI entering overbought territory, MACD line crossing over the histogram bars and beginning to curve downwards, or price dropping below the moving average, or the Bollinger Bands beginning to contract, after price has pierced through above it. You can use different conditions for your exit strategy, okay? So that completely depends on you, all right? Now, in general, aim to risk no more than 1 to 2% of your account balance on each trade. This helps ensure that even if you hit a losing streak, you won't wipe out your entire trading account. Now, let's put everything we've discussed so far into just a very, very brief summary. Okay. And just a hypothetical example, right? So let's imagine that you were looking at a good opportunity. Like you are on the USDCAD chart, and we are on the 1 hour chart at this moment. And then let's say you notice the price is approaching a strong support level, like we can see here. The price is around a strong support level, and then around that time, the 50. Remember that the 50 EMA is the red, while the 200 EMA is the black. So the price is bouncing off the 200 EMA, right? So ideally, we should wait for the price to also bounce above the 50 EMA, in as much as the 50 EMA is above the 200 EMA. So it shows that there's actually some level of bullish momentum, but we need price to bounce above the 50 EMA as well. In addition to that, we have to watch out for the RSI level within the oversold coming up. The RSI should not be within the oversold. It should actually either be close to the oversold and pointing upwards, or enter the oversold and be curving upwards above the 30 level. And then the MACD, we need the MACD line to cross above the 0 line. When that happens, you've got a bullish signal. And then in addition to that, we need our Bollinger Bands to give us a buy signal as well. We need to see price bouncing off the lower boundary of the Bollinger Bands in the upward direction. And then with that, we can go ahead and enter a buy trade. Okay. So to wrap up, a solid USD trading strategy involves understanding the market dynamics, using the right technical indicators, timing your trades during the best sessions, and applying strong risk management practices. Make sure you practice these strategies on a demo account before going live, and always trade with discipline. Okay. If you found this video helpful, make sure to hit that like button, subscribe to the channel, and turn on notifications for more content like this. We've got a lot more Forex tips and strategies coming your way. Thanks for watching, and I'll see you in the next video.